Welcome back to the channel, guys. My name is Jason Pizzino. I've got a huge video for you guys today. Not only are we going to cover a lot of the BNPL stocks on the ASX, but I want to get a little bit deeper into what you guys are about when it comes to your investment and trading goals. But before I dive into that, if you're new to the channel, right here on the channel, we review ASX stocks, US stocks, cryptocurrencies, and look at economic market cycles to educate ourselves on when a better time to buy is so that we can look at making the best sort of profits for our portfolios. And what are the best sort of profits? You guessed it, rocket ships. That's a joke. Massive gains, of course. So if any of those cheesy jokes or investment education is what you come to YouTube to search out, then consider subscribing down below and of course liking the video. I know I ask it on every single video, just like most other YouTubers, but it does go a very long way to helping out the channel and the algorithm, especially when things are changing daily within the platform. So I really appreciate it if you could just give us a little like down below. Viewers of the channel would be familiar with the process of how these videos are structured. We go through the introductions, then the guts of the video, then the summary at the end. So the intro today, I'm going to ask you a few questions about your investing style because I want to clear some things up. And you know that comes down to our rules as well. We like to create clarity, get rid of the noise, continue to educate ourselves on new ideas and how we can implement that into our portfolios. And the third thing is to continue repeating those processes of clearing the noise, getting clarity, educating ourselves. For you guys just coming here to look at the stock information, I leave timestamps in the description down below. But I think it's probably a good idea we cover this because it comes up in the comment section. I might leave a few comments up here just to show you guys. But essentially, some guys are getting a little bit confused, and maybe it's my part and how I'm explaining it when it comes to what I believe about these particular stocks. And I think that comes down to creating clarity around what sort of investors or traders we are. What sort of time frames are we looking at to make returns? What sort of risk profile do we consider ourselves to be under when it comes to our investment strategies? So although I talk about stocks and say that they might not be the right time to buy, that doesn't mean I hate the company or I think the company is absolutely trash. I just think there might be a better time to be purchasing these stocks and wait for those gains to come later on. I have the patience to wait. I don't need to buy something as soon as I see it on a video. So I wonder what type of trader or investor you are. Do you know the difference between trading and investing? Let me know in the comments down below whether you like to trade or invest. This is what we'll find out on a daily to weekly basis. You leave it a few months, maybe you consider staying in a stock investment for 3 to 6 months, or maybe you're a bit more longer term, 1 to 5 years. Let me know in the comments down below, generally from your experience, or maybe just looking forward, what sort of time frames you look for when it comes to purchasing a stock and how long you're willing to stay in those stocks before you see a return or you exit at a loss. With that said, we're going to jump into the buy now, pay it later stocks and do a brief overview because I've covered most of these on the channel already. So basically I want to do an update and just see how we are tracking from our previous reviews. Now I'm going to have a look at these stocks in comparison to the overall market. So I'll quickly look at that. And the stocks we're looking at are Afterpay, Openpay, Splitit, SZL, and Zip Co. Now, I don't think all of these stocks are going to win. I don't think all of these companies are going to be there at the end of the day. So far, we've seen Afterpay take a huge market share. They're going over into the US as well, and they're looking to extend into Canada. Now, I look at this just like, say, Visa or MasterCard. I sort of ask the question, who has the network effects? I think there's only going to be 1 or 2 winners, maybe 3. Why do we need all of these companies to be out there? So I think that's going to be represented in the stock prices now, years to come. So keep that in mind. You've got to do your own research on that. They may all still be around in years to come, but it just depends on which ones are going to have the biggest gains. That's what we need to weigh up when we're looking at the fundamentals. In terms of the technicals, you can kind of start to see that on the chart. Some are leading the charge and are out there more so than the others, and some haven't even broken past their old highs. So that to me is a little bit concerning. Let's check out the charts. So we'll dive into the charts in just a sec, but I just found this article to give us an idea about all the different stocks. It just came out yesterday on the 17th of August. Check it out, stockhead.com.au. This one's got to do with all the BNPL stocks. Have a read through it. I'll leave a link to it in the description down below. That'll give you a bit more idea about the fundamentals, what the companies are looking to do in the years to come, what sort of profit targets they're looking to hit, etc. With that said, let's have a look at the Aussie market, so the ASX 200. Now this is tradingview.com if you don't have it already. I've got a link in the description for it. It's all free, everything that we're going to look at today. You can buy the paid version and that will get rid of all the ads which you see pop up. It does get a little bit annoying, so maybe you consider that. Use the link to get the platform, see if you like it, and if it's something you continue using, maybe consider that. So the ASX 200, you can see we're still trading well below the highs that we set in February, so the top's still in February. We're not too sick. Maybe we'll see some more volatility. That's pretty much what I've been saying for the last several months, actually. Maybe we'll come back down and test these highs at 5,500. Maybe we shoot up again and hit these lows at 6,500 set over on this side. That's to be seen yet. So let's carry on and look at these BNPL stocks. So the first bad boy is Afterpay. Now I'm just going to go through the support and resistance because like I said, we've covered these. Afterpay, support and resistance, I got it around $28 here, 37-ish, those old highs. And then the highs that we've just set at around 75. I want to see support held at 65. That's this level here, which you can see there are some lows at that point. So that's why I want to see that held. Otherwise, I think we might drop down to 55. So it's in maybe an accumulation range up here, or maybe we see it fall back heavily until it gets accumulated again. That just means that maybe this run is over for now, but the company could still be looking pretty good. We know it's in the US, we know all those sort of things, but markets don't go up forever in a straight line. They always come back and then potentially move on again from there. So let's be wary if there's no follow through above 75. I think this stock has the potential to push up a little further from this point, but I don't see that as being a great risk to reward. Maybe it goes up to 85-ish dollars, and I'll show you where I get that from. But from 75 to 85, it's not like an investment that I would be looking at. I think there might be a bit of a pullback, and I would rather get into something that hasn't seen its mega run like we've seen on Afterpay. So where do I get that 85-ish dollars from? And how I do that is I use the fib, and I'm just using that in a swing range where you can see this yellow arrow already. So we use the fib tool, put it to the low, and that's a swing low because the low on that weekly bar is lower than the previous week. Put it to the current high, and then back to a low point. 100% of that range, if it was to repeat again, gets us out at around $86. So that's why I think it might push a little bit higher, but apart from that, I'm happy to wait on the sidelines to see where this goes further from here. Could be completely wrong and it just shoots to $200 a share from here, but generally I think there might be a little bit of a pullback. So with that said, let's move across to OpenPay now. And I'm going to lay these out all the same. OpenPay, support and resistance. We've seen these at the old highs of $1.40. So those levels, just repeating the patterns, we got $2 of these old lows and then $3.20-ish of these other lows. This is in a range at the moment, so between $3.20 and $4. So that could be another area that it's accumulating before it pushes up again. But overall, like we've seen on many of these charts, well, what we will see is that they tend to push up and then have a period of basically losing ground again. So if I just put this on auto, we can just see what happened to Afterpay in the early days. To use it as an example on a newer company, something that's newer on the market, Afterpay shot up back in 2018 to around $22, $23, and then it fell all the way back to about 10. So that's a loss of 50 to 55%. That's probably something that we could see potentially on the rest of these stocks. So OpenPay, if that was to happen again over here, falling from its high of $5, 50% leads us somewhere around that $2.50 mark. 40%, $2.30. So it comes out in a nice area that could be support again. Let's just keep an eye on that, and this hasn't given us a sign yet. It's still in its little zone between $3.20 and $4. Let's move across to the third one, and that is Sezzle. These are the ads that pop up, get rid of those. Sezzle, support and resistance is far from its current price. So that's these areas at these lows, highs, more highs, 450, 250, 120-ish. It's in this triangular pattern at the moment, and personally, I am waiting to see where this breaks out. North or south, that'll determine where we go next, but I would prefer to see highs taken out in a horizontal fashion as opposed to a triangular fashion. That just gives us the first signs, but it could be a fake out, meaning it could push and then fall, or fall and then push. That's why we just got to be onto these things. So I'm looking at this more as a trade at the moment because it has moved so far from its initial low in March at 30 cents or 35 cents. That's a huge gain. Generally, we would see these just start to basically just lose some air and fall away. Maybe pushes and then falls away. Let's see what happens. But again, the risk is just increased because it has moved so far so quickly. So the risk of getting in now and shooting up, I would rather play the game and just see what happens. Sezzle, let's move on to the next, which is Splitit. Now with Splitit, it's below its highs that it set in March 2019. And so it just recently reached those highs in June 2020. Again, you can see another triangle pattern. You can see these support and resistance levels of around 80 cents, $1, $1.16, $1.20. So this to me looks like a nice little level that it could come back to, but overall it's coming from its levels of around 13 cents, I think it was, or 20 cents, and it's only shot up to $1.80. Still massive, awesome gains, and it's sitting below its highs, so it hasn't, lost as much energy, I think, as the other charts, but that could mean that Splitit just isn't going to see as much growth in the future. This is all kind of getting a little bit confusing because it's all kind of like watch and wait. But I'm saying that as a precautionary because these patterns are all very similar. It's just turning into a triangle pattern, and I think the overall market is thinking the same. They don't know where this is going to go. That's why the highs are getting lower and the lows are getting higher. So everyone's in this area where they're unsure of what is going to happen. That's what the triangle pattern usually means. So I would wait for confirmation of a break in either direction to decide what's going to happen. A break, retest, and then a takeoff, and that can happen on the downside as well. So we'll get to our last stock, which is Zip, in a sec, but you can see the trend and the pattern to all of these stocks is quite similar. It's in a point where people are deciding. So let's move across to Zip, see what's going on there. Yet again, we're seeing another triangle pattern. I bet you're thinking, what a freaking waste of time it is looking at these stocks because there's no buy signals here. But this is a good thing. We have to be aware of what's going on in the market and not just jump on the next bandwagon. At least that's my opinion. Let me know yours in the comments down below. Zip, we're in another triangle. We saw a big reversal here on the weekly, which is that volume there, the red, went up, went straight back down. So we saw the market take off. Buyers thought it was happening. False break. So that's what I was talking about earlier, about these areas which are resistance, broke above and then quickly reversed under. So maybe the market is liking this area for accumulation. So this area around $5 to $7, and it's just getting tighter and tighter. So $5.50 to $6.50 now. The positive sign with this is that it's sitting above the old highs. So the old high was set at around 586, and the market is finding support above that old high. That is a positive to this market going bullish again, heading up. It just needs some time to accumulate, some more time to rest at these areas to see if this is a level that requires or demands support. So that's what I'm liking with these buy now, pay it later stocks. Some are in a great position where they could just be accumulating in a zone ready for another move, and potentially the others might see a bit of a pullback. So overall, I think there is possibility for these stocks to be on our watch lists and basically just waiting for a better price or a better signal to purchase into them. That's a really good time to do the fundamental research so that you're not freaking out trying to get in on FOMO. Like I've mentioned on all of these stocks, we want to have patience when it comes to these, and it's best to do the research when the price isn't going absolutely hysteric and when you're not seeing it all over the media, all over YouTube, everyone talking about it. Now's the time to do the research. Like I said, that's just the way that I do things. I like to be able to have some patience and basically not be FOMOing into these sorts of stocks or cryptocurrencies. If you found some value out of that, be sure to leave a like down below. I'm thinking some of the comments are going to be people saying, well, that's pretty basic beginner stuff. And yes, that is the way I like to trade. I've gone through the process of making things overly complicated, adding in all of these tools and oscillators and all these bits and pieces, and the chart just looks like a mess, and you think you're getting something from it. but I found much more success, much more value in just keeping things super simple. And I hope you guys do too. I hope you're able to follow along and just easily apply support and resistance to your charts, and then learn a few extra tools along the way, like some Fibonacci retracements or extensions, so that you can get some price points into the future. As always, I'm open to constructive criticism. If you're going to leave some troll comment, probably get wiped and ignored, but constructive criticism, I always love to hear from you guys. So let me know in the comments down below if you enjoyed this video, what you want to see next. Of course, I've got all of your stock recommendations, so leave them in the comments down below and like them up if you want to see more of that particular stock. For you guys that have watched to the end, I'll leave one quick Gamblers Anonymous stock. I know you guys love to see those come up, see if you can make a quick buck from them. And that stock is something we've covered before, and it's FXL. And I'll add an extra one in here, ICU. Go and check out those charts, go and check out the companies. They are at big lows after big bear markets. Could they come back from here? Yes. Could they fall further from here? Yes. But FXL, which is Flexi Group, and ICU. Why I like these? Because I think they've had their lows through March, and it looks like they're starting to get some life into them, maybe get through an accumulation phase before they move on from here. But of course, do your own research from this point. An extra little addition I'll add just before I go, cryptocurrency. I can't stress it enough. Go and check those things out. Not financial advice to buy anything, just go to it, do your research, set up accounts if you need to, because when the market goes crazy, to get into those exchanges is very difficult. To set your own personal account up, it could take days, and the markets in those areas in cryptocurrencies, they skyrocket in days. So I've got a link to Independent Reserve, which is an Aussie exchange. Set yourself up there if you want to now. You don't have to fund your account. You can just basically leave it at zero, but at least it's set up if at some point in the future you've done your research and you want to purchase some cryptocurrencies. Link is in the description for that. I'll leave it there, guys. Again, I appreciate your support so much. Like it if you found some value from it. Comments, subscribe, you know all the deal. I'll catch you guys at the next video. Until then, have more fun to get more done.